Hi, this is Wayne Zell, and you're watching Blueprint for Wealth. And today we're going to talk about B corporations, also known as benefit corporations. And we're going to compare and contrast them to public benefit corporations, which are adopted by statute in about 39 of the 50 states in the US, as well as the District of Columbia. So let's turn to that. First, what is a benefit corporation? A benefit corporation is really a legal tool that creates a foundation for a long-term mission alignment and value creation that focuses on stakeholders other than just your shareholders. It's designed to create flexibility when you're evaluating a potential sale or liquidity option, and it gives a business with a mission-driven life post-IPO, post-acquisition, etc. Directors of traditional for-profit corporations and companies are required to maximize financial returns to shareholders, the people who own the stock in the company. The single focus is known as shareholder primacy, and it's a very inflexible framework if you study this carefully. It does not allow for-profit entities whose mission and impact is other than focusing on shareholders. A benefit corporation, on the other hand, allows a corporation to opt out of the shareholder primacy model and opt in to stakeholder governance. What I mean by that is a company is required to take into consideration anyone that is materially affected by the company's decision-making, like the employees, your customers, the community, and the wider society and environment as a whole. Benefit corporations effectively are traditional corporations and LLCs with modified obligations and are committed to higher standards of purpose, accountability, and transparency. On the purpose side, the goal is to create a general public benefit, which is either a material positive impact on society and the environment, or it's an obligation to operate responsibly and sustainably, depending on where you're incorporated. Accountability focuses on expanding the obligations of boards of directors and the managers of the entity. A board must consider, as a benefit corporation, environmental and social factors as well as the interests of the shareholders. It gives directors and officers legal protection to pursue a mission and vision that considers the impact of their business on society, on the environment, on the local community, on customers, and not just the shareholders. And then in terms of transparency, benefit corporations are required to report on their progress as they try to achieve a general public benefit. The reporting requirements vary from state to state, but many are required to use a third-party standard to measure their performance and annually report to the public and their customers. There's various guidebooks out there available, and you should check out the bcorporation.net website, which is hosted by B Labs, which is a 501c3 charitable organization dedicated to the proliferation and growth of B corporations. Now, there is a difference between public benefit corporations. As I mentioned, many states have adopted statutes that allow for the creation of a public benefit corporation. So if you're a regular corporation, you can elect to be treated as a public benefit corporation, but you may have certain requirements that you have to meet under state statute. To be a certified B corporation, you have to probably qualify as a public benefit corporation and then do additional stuff to satisfy the requirements of B Lab's certification. And so they're often confused. They share a lot in common. They're complementary, but there are differences. On the accountability side, benefit corporations and certified B corporations, basically the directors are required to consider the impact on all stakeholders, and that includes the consumers, the workers, the environment, etc. That's a similarity. There's no difference really between the accountability requirement for PBCs and B Corps. On the transparency front, both a public benefit corporation and B Corp must publish a public report of the overall social and environmental performance assessed against a third-party standard. Now, that third-party standard, for example, in the state of Delaware, they're not required to report publicly or against a third-party standard, but many states do require that, and clearly the certified B Corp does require that. Their performance of their mission is self-reported. And this is where they differ. Public benefit corporations differ from B Corps. Public benefit corporations, it's self-reporting. So they have an internal obligation to do this for the stakeholders. To maintain your certification as a B Corp, you must achieve a verified minimum score on a B impact assessment of 80 points. And recertification is required every 3 years against a changing standard as society changes. And availability, well, public benefit corporations are available for corporations in almost all U.S. states. They're also available in British Columbia, Canada, and some countries worldwide. Certified B Corp status is available to every business, regardless of their corporate structure, so they can be an LLC, or their country of incorporation. The cost varies significantly between a public benefit corp and a certified B Corp. The filing fees for public benefit corps vary from state to state, but they usually range from $70 to $350 extra to be treated as a PBC. However, B Lab certification fees range from $1,000 at a minimum to $50,000 a year based on your revenues. And the reason is there's a lot of work that goes into the certification process from B Lab, so they need to be able to charge for the certification process. And then the role of B Lab, which is a 501c3, they help develop the model legislation that's been adopted in probably 39 states with some variances from state to state. And they also offer a free reporting tool to meet the transparency requirements that B Lab likes to see for its certification. But B Lab doesn't have any role in oversight of a public benefit corporation. When you are a certified B Corp and you get that certification status, B Lab is the certifying body, and they offer access to the certified B Corporation logo, a portfolio of services that can be provided, and a vibrant community of practice among B Corps across the country and across the world. If you want to know more about B Corps, I suggest you visit usca.bcorporation.net, and it'll tell you more about benefit corporations, how they operate. And in fact, there's a great tool that they have. B Lab offers a tool that you can insert your state, the type of entity you are, and they will tell you the requirements for your organization. So that's all about B Corps. Thanks for listening to Blueprint for Wealth, and I hope you got something out of this, and maybe you'll become a B Corp someday. Talk to you next time on Blueprint for Wealth. I'm Wayne Zell.